Welcome back to Trading Hour on CNBC TV18. Let's shift focus and talk about the latest e-commerce trends, the latest internet trends, what is happening in that sector. We have Sachin Dixit, the Internet Lead Research Analyst from Financial Institutional Securities, joining in with us. Sachin, very good morning. Thank you so much for joining in with us. I want to just start by talking about overall the e-commerce trends that we are seeing currently in the industry. What is it that we're watching out for? And are there any concerns that maybe, those big ticket items, maybe that over there, we could see a plateauing in terms of the penetration there?
So, well, obviously what we are seeing across the e-commerce trends that we are talking about, obviously quick commerce is one side that is coming up, where people are talking about the SKUs widening and the impact of that happening on someone like larger e-commerce incumbents. But what we are also seeing is that our offline participants are now becoming more and more proactive. They are willing to match up the discounts. They are willing to tie up with the credit card companies to offer some of the EMI programs and things similar to that. So that was, I think, what we are seeing in some of the larger ticket items, like let's say the white goods or mobiles. Some of that catching up is happening, which is why we are probably seeing that the mix of e-commerce in some of these categories is starting to plateau to some extent. What is getting compensated by is that basically long tail categories, like something in the home decor side, etc., is coming up, which is what is accounting for some of the rise in mix, or maybe something like an BPC, etc., is also rising on some of the e-commerce platforms.
Okay. The other factor that's taking place is the increase in platform fees, especially during festivals, is what we saw during 𝐉𝐌 𝐅𝐢𝐧𝐚𝐿 increasing it. What's the customer sensitivity to these changes that come by occasionally, or sometimes they are there for a longer period of time as well? Is there any math on this? Does it really impact the product basket or the frequency with which a customer orders on a platform?
Well, it's tough to say right now. Obviously, the platforms are taking a gradual approach in terms of inching up this platform fee. You would have seen what some of the food delivery companies announced pre-Diwali, that they were amping it up for the festive season. They did not commit to it being the long-term scenario. What is happening on the customer side is customer obviously is doing some sort of math at their end. But so far, we have seen minimal price elasticity being visible on that end. And the customers seem to be indifferent so far at the platform fees or the delivery fees that are currently being charged. What is also happening on the other side of this whole puzzle is the e-commerce platforms, like let's say a Flipkart or Myntra. Those were never charging you a platform fee until quick commerce era came up. Now we are seeing for some of these platforms, in order for them to inch up their own profitability or basically take care of the return rates that are quite high in something like apparel sort of a category, they are now also bringing those platform fees on their platforms. So which is where I think overall in the entire ecosystem, platform fees are on the rise. Customers are okay to a certain extent, but obviously we'll see at what point do the customers start to react to the rise in platform fees.
Okay, so far so good in terms of, customers accepting this platform fee that we're seeing coming in, Sachin. But, you did highlight about quick commerce and that being a big growth factor. We've seen companies also talk about the quick commerce side as well. So what is it at in terms of, obviously, we have seen Swiggy get listed recently as well. We have Zomato in the food delivery side that is there. We have Blinkit on the quick commerce front for Zomato. What are you liking over here, Swiggy, Zomato? What are you looking at in this space?
So I think, and this has been a constant Zomato versus Swiggy debate, which I think played out on media as well as sell-side analyst reports. That's a consistent debate. Obviously, over the past few years, we have seen Zomato inch up some market share. Blinkit obviously has out-executed in terms of how the whole ecosystem has evolved. But there are things that have come up on Swiggy side as well. And the company is trying to ramp up some of their own play, whether it's in terms of execution or in terms of profitability. Right now, I think most of the investors are looking at where the valuation favors them. Obviously, none of the platforms is considered that, okay, they will completely lose the plot. So I think both will survive. The market is large enough for both to exist and also make money out of it. Now it's only just someone might a bias for Zomato, someone might like the valuations on Swiggy. So I think right now it's a tough call between the two of them.
I think that debate will continue for a while, Sachin, because those are the two hot takes that everyone's been talking about as well. Let's talk about take rates. We've spoken about the platform fees, but can they charge higher take rates as well? We always talk about how Zomato charges maybe a little more than what the restaurant prices are. Does that reflect the take rate difference? What are these companies focusing on? And does that also mean that these companies cannot just start with the older, new players cannot break into the existing category? They'll have to look at newer categories then.
So sure, I think on the food delivery side in particular, the take rates are pretty much mature. We do not believe take rates in itself will likely rise too much. What is rather happening is that how those take rates are coming up, right? For example, someone like a cloud kitchen, right? Someone who has zero offline presence or customer recall without the food delivery platforms will offer them higher take rates. What we have seen over the past couple of years, some of these cloud kitchens have grown much faster than the typical restaurants that we go to dine in at. So when these cloud kitchens rise in mix, the overall take rates do tend to go up for these platforms. Secondly, what we are also seeing that some of the restaurants, they were very reluctant to advertise on these food delivery platforms in the past. Now their sort of adoption to advertising on these platforms has also come up, which also gives rise to a higher take rate. I do not believe like-to-like take rates have too much room to go on the upside. There might be incremental shifts up or down, but I do not think they will change very significantly. The only change is likely to happen in terms of the restaurant mix or the advertising proportion that comes to them.
Okay, Sachin, and just a word in terms of overall, if one has to look at the India internet story or play the e-commerce side, what would you be looking at right now?
So, well, I think some of the companies are yet to come to public markets. There are plans that some of these companies are executing, whether in terms of trying to shift their domicile to India from where they were, whether it's Singapore or US. So that sort of play out is likely to happen. Right now, I think for public markets at least, India internet is still an undiscovered story. A lot of the discovery is yet to happen, whether in terms of business models or in terms of pricing or valuations. I think a lot of it is yet to play out. So I'll suggest most of the investor community to keep their eyes out in terms of what is coming to markets over the next few years, because I'm sure a lot of action is still out there.
Oh, there's never anything stopping the great India consumption story, right? So there's so much happening, and all these stocks, they have started to make a comeback as well. So thank you so much, Sachin, for joining in today with your take and what's happening in the new internet era when it comes to different new platform themes that we've been talking about. We'll do one thing, we'll slip into a short break. We'll get you more on the markets on the other side and stock specific action as well.